Swarms is the latest play on artificial intelligence on the Solana blockchain. Now there's already virtual protocol on the base chain and virtual went pretty much to the moon. The question is, can swarms do the same? Let's have a look. In this video, we are going to look at on-chain analytics. We're going to look at the buyers and sellers of the token. Are the whales dumping? Are they continuing to accumulate? Is there some organic growth by retail? Let's dive deeper. Now the token is currently at 33 cents. And since listing on CoinMarketCap 4 days ago, it more than doubled. It's now the 6th largest trending token on the Solana chain in terms of liquidity. There's 6.5 million in the Radium pool. And so this is then how that looks like over time. In the last 24 hours, we did not go up, despite there being 900 more buyers compared to sellers. In other words, the sellers are taking profit, right? The sellers tend to move more capital per transaction than the buyers do. Now, here's the nice thing about Swarms. Despite it being launched on pump.fun, it's actually not a meme coin. It's a completely new platform and it's even got more scope than Virtual Protocol does. So there aren't just AI agents, there are also models, prompts, tools, and swarms. Now, there isn't yet that much adoption. A lot of the agents and models don't even have a single rating. That being said, this is a first start. It's better than just a random meme coin. In this video, we will not focus on the technology because this is not what moves the price. We want to see, can the price go further up? Who's buying here? On Twitter or the X platform, there are currently 24,000 followers. The Discord has 13,000 members. And on-chain, we've got 24,000 holders. So all of those numbers somewhat align. It doesn't seem like there is a lot of manipulation of the social metrics. That's good. Now within the pump.fun ecosystem, Swarms is not small, but it's not yet at the top either. It's got a market cap of 300 million. With a 2x from the current position, Swarms would go up all the way to number 3 in terms of market cap within pump.fun. With a 3x, it would be at number 2, and with a 4x, it would rival the largest of the pump.fun ecosystem tokens, which is Fartcoin. Now, what's important to know about all of those tokens is a lot of them are now listed on centralized exchanges and have most of their liquidity on centralized exchanges. This is not yet true for Swarms, but more on that later. Let's first have a look at those 24,000 holders. What we've got over here is the number of retail investors versus whale investors over time. And the way we make this distinction is by looking at minimum holding thresholds. So we are not counting every wallet. We are only counting wallets in this left chart that have at least 3,000 Swarms tokens. So at the current price, that's roughly $1,000 worth of the token. We go at 10x in minimum holding for the chart in the middle. So that's now 30,000 tokens or $10,000. And on the right, another 10x, that's $100,000. We can see initial very quick adoption by retail, then subsequently a sell-off, then subsequently accumulation again. We see the same kind of adoption for medium-sized holders and large holders, but we don't really see that second wave of accumulation as we have for small holders, right? The medium-sized and large holders tend to not go up in numbers anymore. This seems to be now a rally mainly driven by small retail. However, there is a bit of a caveat to that story, because even though the number of whale wallets is not increasing, the percentage of all the tokens that are held by those different wallet cohorts increases for the whales. In other words, the small retail investor buys, the number of small retail investors going up, but the whales that are already in the token, they tend to dollar cost average faster into the token than the retail investors can buy in. And here's a chart that shows that. Have a look at the ownership that's by wallets that have at least $100,000 worth of the token. More than 80% is now held by such wallets. The ownership by the wallets that have less than $1,000 worth of the token is now less than 1%. And at one point, this was 3%. There's also an interesting data glitch over here where it was more than 40%, but I'm not sure how reliable that is. Now, we are currently in an expanding market. There's money flowing in from traditional finance into crypto. We can see this in the stablecoin market cap. I like this chart quite a lot because it has very little volatility and it shows us very clearly if we are currently contracting and we should be betting on falling prices, or if we are expanding and money is flowing into crypto and we should be betting on rising prices. Since October of 2023, the circulating stable supply has grown by 62%. We are now at $188 billion. When you're sending your hard-earned fiat to Binance, Binance then sends this over to a stablecoin issuer that takes custody of the funds and that then afterwards issues the tokens on the blockchain. And we can see the issuance here in the chart. The thing is though that returns are now very much asymmetric. We can't anymore just buy 100 different altcoins and hope to outperform Bitcoin with that. Have a look at the top performing categories in the last 7 days. It's meme coin related, it's the pump.fun ecosystem, it's AI. So unless your portfolio has nothing but AI and meme coins, you're likely underperforming just plain and simply holding Bitcoin. Here is what didn't perform that well. Privacy coins, real world asset protocols, bridge tokens, proof of work tokens, lending and borrowing protocols. And why did those tokens perform worse than say the meme coins and the AI agents? It's because of tokenomics. Everybody got burnt after the DeFi summer because of token unlocks, right? Venture capitalists sold all their allocations. And so when we're speculating with a lot of risk anyways, when we buy all of those altcoins and we want to get the upside, why not simply play fairly player versus player? This is, I believe, why AI and why the meme coins are doing that well. Here, have a look at this, right? This is the tokenomics of the balancer token. This is how much the balancer supply increased over time. Within the span of 4 to 5 years, the supply more than 3x'd. And that then means that the token has to underperform Bitcoin and Ethereum. Over here, this is the balance price relative to Ethereum. So not to the US dollar, because when Ethereum and when Bitcoin goes up, then of course balancer goes up as well, but it's always about relative performance. Do we get more performance by taking on more risk compared to just buying Bitcoin? And for most tokens, unfortunately, the answer is no. We don't see that outperformance, right? Balancer versus ETH did very, very poorly. And that is why people now get into meme coins, etc. Because the supply is not expanding. We do not see an underperformance of literally 99%. What performed the best in the last 7 days? SPX 6900 and Fartcoin. Both are meme coins. SPX 6900 is now at $1.53. Fartcoin is at $1.34. And it's always about being early. Now, how fair is meme coin trading? It's 100% player versus player, but at least it's not venture capitalists or insiders or team versus player. But player versus player in the end still means that the player that has most information and that has most skills tends to make most money. So simply just gambling on altcoins isn't going to cut it. It's about getting the right info. And so have a look at SPX 16900. There are several alerts here, and Kyle Chessy bought the token at 47 cents. Again, now we are more than 3x that value. Or have a look at Fartcoin. Kyle Chessy bought at 4.5 cents. And he's not buying small amounts, right? He's buying 20K over here. Those 4 to 5 cents turned into $1.34. So that's a 25x from here, right? If you make bets like this, it's okay if half of the bets, if even 3/4 of the bets go down. It's really an approach comparable to what the professionals are doing, right? It's buying a lot of small things, but only buying a lot of things where there's a lot of upside. You don't want to buy a lot of large altcoins. You want to buy a lot of small ones, and you want to only buy the things where the insiders have some knowledge. So I've talked about Kyle Chessy now twice in this video. Here is his YouTube channel. He's got 141,000 subscribers. And the reason why we've got these kind of alerts is because we track his wallets. We've got 12 of Kyle Chessy's wallets in total. Have a look at this. This is Crypto Banter. They've got 1.1 million subscribers. And here's the thing with crypto. There isn't a lot of regulation, right? A lot of people simply buy a token and then afterwards promote it on YouTube. And so when a channel with 1.1 million subscribers talks about a token, of course this generates attention. Of course attention leads to purchases, and of course purchases lead to rising prices. And we've got 33 of Crypto Banter's wallets. We know when they are buying and selling. Or check this out. Alex Becker's channel, 1.55 million subscribers, even more. We've got 12 of his wallets. Making money in crypto, I believe, is all about buying with the anticipation that more people will buy afterwards. Now, if influencers buy something and they talk about something, it's likely that there will be a lot of purchases afterwards, right? Depending on how large the token is, of course, and how large the following of the influencer is. If Alex Becker is talking about Bitcoin going up, it's very unlikely that that's going to move the needle. But if Kyle Chessy is buying Fartcoin for 4 cents, then this might might move the needle. Now, I like this strategy that much that I made a dedicated tutorial section just on this topic. How can we find influencer wallets? How can we track influencer wallets? And how can we interpret the signals that we get from the tracking? It's all part of the premium membership of this channel. Feel free to check it out. It's thebitcointrader.com. Premium is not just about wallet tracking. It's also about risk mitigation. It's also about on-chain analytics. There's more than 100 tutorial videos in total in premium. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't learn anything, etc., just message me within the first 7 days and I refund you 100%. There's really zero risk for you. Now, does it still make sense to buy the Swarms token since it already went up that much? Is this going to be a pump and dump? And are we buying high in order to then afterwards sell low? That's the question of the question. In the end, there's always risk. And especially for pump.fun ecosystem tokens, the risk can be very, very large. A drop of more than 70% in the span of a single week after launch. And that's only 1,400, 1,300 wallets selling. The majority of wallets continued holding. But it appears as if momentum turned around, right? From that bottom, we are up more than 2,400%. Now, here's what I like about the token. The token is not yet mainly owned by the centralized exchanges. Yes, the whales have more than 80% of the supply, but a lot of that could be smart money that's anticipating a centralized exchange listing. Because right now, most trading volume still happens on decentralized exchanges. This is where the price discovery happens. It happens on Radium and on Meteora. Gate.io and Maxi offers the token as well, also with perpetual futures. But I believe that over time, those centralized exchanges will increase their ownership, relatively speaking. Because again, 6.6 million still of the liquidity is on chain with a market cap of 300 million. Pengu has almost 8 times the market cap, but it doesn't have 8 times the liquidity, right? It's only half of that. Let's say we count Swarms not as an AI launchpad, but just as an AI meme coin. How high could it go, relatively speaking, to other AI memes? It's not really that obvious because even though Fartcoin and Turbo here is listed as AI meme coin on CoinGecko, the real next AI meme coin is probably Frizer AI. By the way, this channel has also a video on Frizer. Feel free to check it out. That would bring us another 2x from here, roughly. Of course, within the AI sector as a whole, there are way larger market caps. There's BitTensor, there's Render, there's Virtual's Protocol. But the main thing for Swarms to reach levels like Virtual is that the platform cannot just launch the models, but that it can actually launch dedicated tokens for the models that then people can speculate on the game token, on AI XBT, on Luna, etc. That's what we see with the Virtual Protocol. We don't see that yet for Swarms. And so short term, maybe a 2x. Long term, once we see launches of other tokens on the platform, it could do another 10x even from here. But first, I want to see that executed. If we don't see anything like this, then probably selling after 2x is more than enough. The centralized exchanges are likely going to continue to accumulate over the next weeks. If you got some value out of this video, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers!